അത് എക്സാമിന്റെ ഇട്ട സമയത്ത് ഒരു കൺഫ്യൂഷൻ വന്നിട്ട് ഞാൻ നയനെ വിളിച്ചു ക്ലിയർ ആയിട്ടോ. എനിക്ക് കുറച്ച് ബുദ്ധിമുട്ടുണ്ട്.
Good afternoon, everyone. Hi, we are meeting again by surprise because the lecture was not scheduled. And today, Vishnu Priya madam just contacted me, sir, if you can take the lecture. And here we are. So it is our surprising meeting. Good afternoon, Jasmine. Good afternoon, Lakshmi. Devika, good afternoon. Nino, good afternoon. Normally we meet in mornings. Today we are meeting in afternoon. So how are you being? Everything fine? Now, before I start my today's lecture, what I want you people to do is on page number 15, in the last class, we started with chapter called Redemption of Preferences. And on page number 15, we have that 4 legal provisions regarding redemption of preferences. And we have 5 journal entries regarding redemption of preferences. Everybody just run through very, very properly. Please revise notes from page number 15. Revise notes, page 15, that 4 legal provisions we have and 5 journal entries. Everybody just run through them very, 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 very properly. Everyone. 4 legal provisions we have and 5 journal entries we have, which I want you people to revise well. Please message me once your revision is over. 4 legal provisions we discussed in the last class. And then we learned 5 journal entries. Please revise very, very properly because today we have met without any prior notice, right? This was not a scheduled lecture today. We have met suddenly. So I'm expecting that you must not have revised because if the lecture is scheduled, normally persons revise before joining the class. But today this lecture was unscheduled. It has suddenly come. So better you go through everybody. 4 legal provisions and 5 journal entries from page number 15. Everybody revise. In fact, the number of participants are still 63. That means 64 now. The lecture was at 1:30 and it is already 1:30. Why people are late? Now 70 participants. Good afternoon, Aswati. Good afternoon. Now no more good afternoons. Just focus on reading, 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 reading. Revise notes very properly, and 4 legal provisions also revise very, very, very properly, everybody. ATT participants till now. Revise well, everyone. Chalo, revision done. Once you have done your reading, please message reading done, reading done, reading done, reading done. Done, done. Devika is completed. Anjali completed. Akash completed. Binil Vaishnav. Okay, very good. Very nice. God bless you guys. So this was a sudden lecture for us. And now everybody just go through the question sheet and tell me which all questions we have already completed. As far as I know, question number 4 is over and question number 7 is over. Somebody confirm? Yes. So I have a good memory. I am not like absent-minded professor. Okay, 4 and 7 are over. Okay, nice. Chalo, now we will take up the next question. Take up question number 11. Everybody, please take up question number 11. Question 11. Please read it, everyone. The following is the balance sheet of Radha Limited. The following is the balance sheet of Radha Limited on 31st March 2017. Share capital 5,000 equity shares of 100 each, 5 lakh. 2,000 6% redeemable preference shares of 100 each, fully called 2 lakh. Less calls in arrears 2,000. Rupees 20 per share on 100 shares. Amount is 198,000. 1,000 7% redeemable preference shares of 100 each, 60 paid up. Profit and loss account and creditors. Assets are fixed assets and cash at bank. Further, on the above date, preference shares are redeemed to the extent at a premium of 5%. And the question asked is past journal entries. Such a short and sweet question. All right. Now listen to me very carefully. Everybody run through the balance sheet and tell me in this question, there are how many classes of preference shares? 1 or 2? There are how many classes of preference shares? There is 1 class or there are 2 classes? Perfect. There are 2 classes of preference shares. Some are 6% preference shares and some are 7% preference shares. And now you tell me, out of 6% preference shares and 7% preference shares, which shares can not be redeemed? Why? Shares cannot be redeemed and why? Jai Krishnan is writing 7% preference shares cannot be redeemed. Vaishnavi also writing cannot be redeemed, 7%. Reason? Because they are partly paid. Correct. Absolutely correct. You people are just mind blowing. So write down question number 11 in that note number 1. 7% preference share capital can not be redeemed because the shares are not fully paid. Because the shares are not fully paid. Shares are not fully paid. Is everybody clear? Just like clear, and send me. Fast. Messages should be coming fast. Perfect. Now, I'm asking you second question. There are 2,006% preference shares. I repeat, there are 2,006% preference shares. Now tell me, out of these 2,006% preference shares, how many preference shares can not be redeemed? Absolutely correct. Absolutely correct. 100 shareholders shares cannot be redeemed because on those 100 shares, 20 rupees per share is calls in arrears. So your second note out of 2,000, 6% preference shares, comma, 100 shares can not be redeemed as they are with calls in arrears. Perfect. So out of 2,000, 6% preference shares, 100 shares cannot be redeemed as they are with calls in arrears. Are you clear? And now they have asked us to pass journal entries for redemption. So everybody draw journal of, what is the name of the company? Radha Limited. Let's do one thing. In this sum, let's not write narrations. Let's have headings. If you don't draw journal, it's okay. Journal of Radha Limited. Journal of Radha Limited. As per my discussions in the last class, first entry is always for fresh issue. Everybody run through all the adjustments and check how many shares are issued as fresh issue. How many shares are issued as fresh issue? Run through all the adjustments and see fresh issue is how much. Yes, you people are so right. In this question, fresh issue is not there. Not given. Okay. Now, second entry is for redemption. Into bracket, money payable to preference shareholders. Money payable to preference shareholders. Now, 1,906% preference shares are possible to be redeemed. Barabar? And they are redeemed at a premium of 5% they have given in the question. So entry will be 6% redeemable. Oh, no need to write the word redeemable also. 6% preference share capital account debit. It will be 1,900 into 100, 1,90,000. Premium on redemption account debit, is it 5%? Somebody confirm, is it 5%? And how much is the premium on redemption coming? $1,90,000 into 5%. 9,500 to preference share holders account 199,500. Third, for writing off premium on redemption. For writing off premium on redemption. You tell me premium on redemption rupees 9,500 must be written off out of what? Anjali has given answer, Jibu has given answer, Jai Krishnan, Muhammad, oh, so many, Parvati, Vaishnavi. Yes, it is always to be written off against divisible profit. And in this question, the item of divisible profit is profit and loss account. So it will be written off against profit and loss account entry. Profit and loss account debit. 2. Premium on redemption account amount. $9,500. Correct. For creation of CRR. For creation of CRR. Chalo, everybody please wait, pay attention here. How much CRR is needed to be created? So listen, in the last class, I gave you one formula, how to calculate CRR. CRR required. How do we get that? So we take the amount of PSC redeemed, and from that we minus fresh issue of shares. So preference share capital redeemed is 1,90,000. Preference shares redeemed is 1,90,000. Against that, fresh issue is illa. Fresh issue is not there at all. That means CRR needed is 1,90,000, and this CRR is also created out of divisible profits only. So our entry will be profit and loss account debit to CRR account. Amount is 1,90,000. Right? Is everybody crystal clear? Everyone, are you crystal clear? Perfect. Write down this entry number 4, and below with that, with a different color pen, write down the working of CRR required also. How many colors pen you are using in notebook? How many colors? Minimum 4 or 5 colors has to be there. Believe in some colors in life. Now Corona has started going. The things are slowly coming back to normal. So the colors also should be back in our life. Chalo. Now, last entry, entry number 5 for payoff. Entry. Preference shareholders account debit 199,500 to bank account 199,500 and the solution is over. Tell me, was it a difficult question or it was easy? It was easy question. Easy peasy. Sir Golden. Most welcome. Yes, yes, yes. These type of questions are most welcome in exam. Okay. Chalo. Now we take next question. Take up question number 12, page number 20. Question number 12, page number 20. Question number 12, page number 20. You have one whole page blank. Just write in a small handwriting, a small question, right? Yes, I know it is not there in the balance sheet. It is not prank. It is just a joke. What prank? Chalo, write down. The following is, I am also writing, you also write. The following is extract of balance sheet of X Limited on 31/3/2020. On 31/3/2020. 31st March 2020. Chalo, write down below that. 9,000, 10% preference shares of rupees 100 each, comma, fully paid 9 lakhs. I'm repeating again. 9,000, 10% preference shares of rupees 100 each, fully paid 9 lakhs. Next. 12,000, 8% preference shares of rupees 100 each, comma, rupees 8 paid. 12,000, 8% preference shares of rupees 100 each, rupees 8 paid. Amount. Rupees 80 paid. 80 paid, sorry. 80 paid. 12,000, 8% preference shares of rupees 100 each, 80 paid. Amount 9,60,000. 9,60,000. Below that, 10,000 equity shares of rupees 100 each, comma, fully paid. Amount 10 lakhs. Amount 10 lakhs. Next line. General reserve. General reserve rupees 20 lakhs. General reserve rupees 20 lakhs. Securities premium. Securities premium rupees 5 lakhs. Securities premium rupees 5 lakhs. Securities premium rupees 5 lakh. Next, profit and loss account rupees 12 lakhs. Yeah. Now, next line, give the heading additional information. Additional information. Okay. The company made fresh issue of of 8,000 equity shares of rupees 100 each at 25% premium and redeemed both classes of preference shares. Both classes of preference shares at 5% premium. Both classes of preference shares at 5% premium, full stop. Pass journal entries. That's it. And the question is over. And the question is over. Company made a fresh issue of 8,000 equity shares of 100 each at 25% premium and redeemed both classes of preference shares at 5% premium. Pass journal entries. This is our question. Chalo, now listen. In this question, again, there are two classes of preference shares. One is 10% preference shares of 100 each fully paid. And second is 12,000, 8% preference shares of 100 each rupees 80 paid. So under normal circumstances, fully paid preference shares would have been redeemed and partly paid shares would not have been redeemed. But in this question, the examiner has hammered and insisted that company has redeemed both classes of preference shares. So tell me, what will be your hidden adjustment when the company specifically says they want to redeem both classes of preference shares? Tell me what? Bonus shares not right, others not right. Jaya Krishnan, you are right. You are going to make an assumption that rupees 20 per share on 12,000 shares, call will be made, money will be received, they will be made fully paid, and then they are going to be redeemed. Superb. It is not bonus. It is call will be made and money will be received. Write down. What's the question number? Question number 12. Write down. In this question, write down. In this question, it is specifically mentioned to redeem partly paid shares also. In this question, it is specifically mentioned to redeem partly paid shares also. Partly paid shares also. Which means that they are assumed to be made fully paid. They are assumed to be made fully paid by making a call. By making a call. By making a call. By making a call. Full stop. Okay. In this question also, we will not write narrations, but we'll write headings. When we will come to exam sum, we will do a proper presentation in the next sum. Chalo, give the heading, Journal of dash dash dash. Name of the company is not given. Journal of so and so. Okay. First entry for fresh issue. Tell me how many shares are issued as fresh issue. How many shares are issued as fresh issue? Come on, come on, come on.
8,000.
8,000. So entry. Bank account debit to equity share capital account 8,000 into 100 to securities premium 8,000 into 25. The shares are issued at 25% premium. So equity share capital 8 lakhs. Securities premium 2 lakhs. Total 10 lakhs. Two. For redemption, but before that, you will have first entry for making partly paid preference shares into fully paid by making and receiving call. For making and receiving call. Entry. Bank account debit to. Now, in this question, 10% preference share capital is already fully paid, but 8% preference shares are partly paid. So it will be 2. 8% preference share capital account. You tell me it will be what multiplied by what? It will be what multiplied by what? Come on, tell me. It will be what multiplied by what? Yes, you all are correct. It will be 12,000 into 20. How much it comes to? $240,000. Now third, for redemption. Now nobody writes, everybody please pay attention here. Now in this question, there are 2 groups of equity shareholders getting redeemed. Please don't write. Understand this entry first, then I'll ask you whether you have understood the entry or not, and then you write after replying to me, you are clear. Please pay attention here. My entry for redemption will be 10% preference share capital account debit. That will be 9,000 into 100, 9 lakhs. Then 12% preference share capital account debit, 12,000 into 100, 12 lakhs. Premium on redemption account debit. So 9 lakh plus 12 lakh, total redemption is 21 lakhs. Of 21 lakhs, 5%. Okay, 21 lakhs, 5% comes to how much? Okay, sorry, second share capital is 8%. 21 lakhs into 5% comes to 1,05,000. 2. Preference share holders account, 22 lakh 5,000. Everybody tell me, are you clear about this entry? So instead of 1 group, 2 groups are redeemed. So when 2 groups are redeemed, 2 preferential capital will be debited. Perfect. Now you copy everybody. Everybody, please copy. Next entry for writing off premium on redemption. Achha, now, can you tell me premium on redemption will be written off against which amount? Premium on redemption will be written off against which amount? Yes, we will write off against general reserve. Entry. General reserves account debit to premium on redemption account amount 1,05,000. Next entry for creation of CRR. For creation of CRR. Now, for the first time in the day, I am asking you how much CRR will be needed. Can you tell me how much CRR will be needed? Ramesh is writing 13 lakhs. Somebody else? Ramesh is writing 13 lakhs. Swati is writing 13 lakhs. Binil 13 lakhs. Jaya Krishnan 13 lakhs. Vaishnavi 13 lakhs. Ronjor 13 lakhs. Anjali 13 lakhs. Nehla 13 lakhs. Yajisha 13 lakhs. And let me tell you, all these people are perfectly correct. I really salute you guys. Mohammed Shabat is writing 13 lakhs. Sir Golden Hand is also writing 13 lakhs. And let me tell you, 13 lakh is the perfect amount. See, 9 lakh plus 12 lakh. 21 lakh is preference share capital redeem. Against that, 8 lakh is the fresh issue. So it is 21 lakhs minus 8 lakhs, 13 lakh is CRR. CRR also will be created out of general reserve entry. General reserves account debit 13 lakhs to CRR account 13 lakhs. Below that, working. CRR required. PSC redeemed. Preference share capital redeemed. So preference share capital redeem is 21 lakhs minus fresh issue of shares amount 8 lakhs. So 13 lakhs is CRR. And last entry, for payoff. Preference share holders account debit to bank account. Preference shareholders account debit to bank account. Amount will be 22,05,000. $22,05,000. Are you perfectly clear, everyone? Acha. Listen, now in this question, extract of balance sheet is not asked, but I want to teach you this extra also. Leave 3 lines and give the heading. Extract of balance sheet into bracket relevant items only. Relevant items only. One. Share capital. Acha. Now in the existing balance sheet, 10% preference share capital was there, that is gone. Then 8% preference share capital was there, that is also gone. And now equity share capital was there, 10 lakh. Acha, 10 lakh equity share capital was there. And in that, another 8 lakh is added. So total it is 18 lakhs. So it is 18,000 equity shares of 100 each, comma, fully paid. Amount is 18 lakhs, double line. Everybody clear how 18 lakhs came? Everybody clear how 18 lakhs came? In the existing balance sheet, Jasina is asking once more. See, Jasina, in the existing balance sheet, equity share capital 10 lakh was there. Achha, that 10 lakh was there, and you have made a further fresh issue of these 8 lakhs in entry number 1. So 10 lakh was there, another 8 lakh are issued, new equity share capital is 18 lakhs. Are you clear, Justina? Okay, nice, Justina, good. Now, second is reserves and surplus. Reserves and surplus. Achha, in reserves and surplus, first, general reserve. The existing amount of general reserve was 20 lakhs. Achha, out of 20 lakhs, how much is used? So for writing of premium, 1,05,000 is used. And for creation of CRR, 13 lakh is used. So 20 lakhs minus 1,05,000 minus 13 lakhs Tell me how much general reserve will be left over. 20 lakh was there. 1,05,000 is gone. And 13 lakh has gone. 5,95,000 is left over. Okay. Next was securities premium. Acha, securities premium as per balance sheet 5 lakh was there. As per balance sheet, securities premium 5 lakh was there. Correct? Acha, in that 5 lakhs, another 2 lakhs will be added because on fresh issue, we have got so 5 lakh plus 2 lakh, total securities premium 7 lakhs. Acha, after securities premium, next item is profit and loss account. Now see in your entries, tell me profit and loss account is touched or profit and loss account is untouched. Check. Is profit and loss account touched or it is untouched? Untouched. That means profit and loss account 12 lakh is untouched. It will remain as it is. Achha, now all the reserves given in the question are over. Now look at your journal entries and tell me, is any new reserve has come into an existence? Has any new reserve came into an existence? Check your journal entries. Yes, a new reserve called CRR has come into an existence. Amount is 13 lakhs. And you get your balance sheet. Total of reserves. Total of your balance sheet 5,95,000 plus 7 lakh plus 25 lakh. Total 37,95,000. 37,95,000. Chalo, everybody has completed the sum. Everyone has completed. Chalo, now we take CA exam sum. We did so many easy sums, and now we take some good sum. Take up question number 2. It's a good sum. You will like it. Question number 2. It's a good sum. Please read everybody. Question number 2. The following is summarize balance sheet of XYZ Limited. 50,000 equity shares of 10 each, 5 lakhs. 1,000 10% redeemable preference shares of 100 each, 1 lakh. Minus calls in arrears, rupees 50 on 50 shares at the rate of rupees 20 each. 5,000, 11% preference shares of 100 each, rupees 60 paid up, general reserve, development rebate reserve, and creditors. Assets are goodwill, land and building, plant and machinery, stock. Debtors, bank balance, preliminary expenses. Further 4,500 equity shares were issued at a premium of 10%. So that is your fresh issue. Second, of the 50 preference shares, the holder for 40 shares paid call money before the date of redemption. Balance 10 shares were forfeited. Further, preference shares were redeemed at a premium of 10%. Now, fourth adjustment, please put a star mark. Fourth adjustment, please put a star mark. Securities premium was utilized to write off premium on redemption. Oh, in this question, the examiner has specifically said that the premium on redemption has to be written off against securities premium. Now, this is technically not correct, but when examiners say something, then for us, examiner is a god. What he says, we will do it. Right? So examiner has forced us. Ramesh is writing rightly so. Achha, now since it is a proper CSM, we will do a proper exam presentation. Everybody draw a proper journal, but before drawing journal, look at the question and tell me which preference share capital can not be redeemed. Everybody look at the question and tell me which preference share capital can not be redeemed. Yes, write down question number 2. 1. Note number 1. 11% PSC can not be redeemed because it is not fully paid. That is first. Now tell me second. Tell me second, please. Now out of 1,010% redeemable preference shares. Now everybody pay attention here. Everybody. Now let's talk about 10%, sorry, 10% preference share capital. Now listen, 10% preference share capital. Now in 10% preference capital, see something very typical given in this question. Number of shares are 1,000. Number of shares are 1,000. Acha, tell me, out of these 1,000 shares, you tell me how many are defaulters? $50 are defaulters. If 50 are defaulters, that means how much are fully paid? 950. 950 are fully paid. But everybody read adjustment number 2 very properly and see, out of these 50 defaulters, some persons became fully paid by giving the call money before redemption. Tell me, how many persons gave call money before redemption? Oh, 40 persons paid call money before redemption. That means from the defaulters list, 40 will reduce, and in fully paid list, 40 will get increased. That means now 10 are defaulters and 990 are fully paid. Correct? So as per Companies Act, 990 preference shares can be redeemed. Yes. But regarding these remaining 10,000 shares, they have specifically said that these 10 shares are forfeited. Correct? Tell me, is everybody clear about this analysis? Originally 50 defaulters were there, but 40 persons have paid call money before redemption. That means they became fully paid before redemption. So now the final story is, out of 1,000 shares, 990 will be redeemed and balance 10 shares will be forfeited. Chalo, copy this working and then draw a systematic journal, because we are going to solve this sum systematically. Chalo, draw a journal, everybody. Draw a systematic journal, everyone. Journal of XYZ Limited. Date, particulars, ledger folio, debit, credit. Date, particulars, ledger folio, debit, credit. Date column, question mark. Achha, now listen. In this question, we are going to have some extra entries, right? First extra entry will be that these 40 persons paid their call money before redemption. So entry will be bank account debit to calls in arrears account. 40 into 20, it is 800. Being write down the narration. Being call money received from 40 defaulters. 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 Okay. Now below this, next entry. Achha, next will be entry for forfeiture of these 10 shares. Now, this forfeiture entry gave me a lot of trouble in the earlier batch because most of the students were science students, but you all are commerce students. So everybody, those who are direct entry student, remember your graduations. Those who are CA foundation student, remember your CA foundation. Tell me what is the entry we passed for forfeiture of shares. Tell me the entry for forfeiture of shares. Entry for forfeiture of shares. Share capital account debit, correct? No, Devika, there is no mistake in amount. 40 into 20, I have written 200. Yeah, it is my mistake. It should be 40 into 20. 20 was call money. Share capital account debit, forfeiture entry, share capital account debit to forfeited shares account. Noring, it is half correct. Share capital account debit to forfeited share account to share application and all account. No, not correct. Not correct, Habis. Habis, not correct. Calls in areas will be credit, yes. So share capital debit to forfeiture account to calls in areas account. Yes, this is correct. Hashir is correct. Mohammed Yunus is correct. Now listen, everybody, see over here. Entry for forfeiture will be 10%. Don't write anybody, everybody stop. 10% preference share capital debit, 10 shares of 100, amount 1000. 10 shares of 100, amount is 1000. 2. Calls in arrears. It will be 10 shares into 20, 200. 2. Share forfeiture, 10 shares into 80, 800. Or if you don't want to write 80, don't write. Share forfeiture, just write in the bracket balancing figure. Share capital is debited by 1000. Calls in arrears is credited by 200. The balance amount share forfeiture account. Take a second. Are you clear, everyone? Everybody clear? This was the entry we learned in CA Foundation for forfeiture of shares. Habis has written correct. Everyone clear about this forfeiture entry? This forfeiture entry we had in our CA Foundation direct entry students. We had this entry in our graduation studies. And those who are science student, Please, these you may come across for the first time if you have not done your basics of company account. If share are forfeited, always share capital account gets debited. Share capital account gets debited. Calls in arrears account gets credited with money unpaid by defaulters, and share forfeiture account gets credited by money already paid by defaulters in past. For those who are science student, yes, I think you may come across the entry for the first time. If you have not done basics of company accounts. Where are the science students today? Alina, Safina, Hajira, always science students. Where are you people? Are you all there? Safina is there today. Hajira, Alina. Who else was science student? Shiv Shankar is writing every name ends with N. No. Safina is the only word ending with N. Hajira, where N? Narration I have not yet given. Read on the narration. Being 10 preference shares forfeited. Being 10 preference shares forfeited. Now, what I am saying, even CA foundation students and commerce graduate, please listen to me carefully. As per fundamentals, this balance which is available in share forfeiture account, this is to be used in future for giving discount on reissue. I repeat, for giving discount on reissue. But we know that these 10% preference shares which we are forfeited now will never be reissued ever in future. Reason? The life of 10% preference share capital is getting over today. And when their life is getting over, these preference shares are not going to be ever reissued in future. And that's why the entire balance in share forfeiture account will be transferred to capital reserve by passing the entry read out share forfeiture account debit to capital reserve account. Amount 800. Normally, after forfeiture, reissue comes, and after reissue, the balance is transferred to capital reserve. But in this question, reissue is not there at all, and it will be never there in future because the life of 10% preference share capital is getting over today. So the entire balance in share forfeiture will be considered as surplus, and the whole amount is transferred to capital reserve. Narration being entire balance in share forfeiture account transferred to capital reserve. Being entire balance in share forfeiture account transferred to capital reserve. Tell me. Next. Next will be now normal sum. First entry will be for fresh issue. Acha, how many shares are issued now? After these three entries, it becomes a normal question. First entry for fresh issue. How many shares are issued as fresh issue? Bank account debit to equity share capital account to securities premium account. Bank account debit to equity share capital account. It is 4,500 into 10 and 4,500 into 1. Because shares are issued at a premium of 10%. 45,000, 4,500, 49,500 being fresh issue made of 4,500 equity shares. Next entry for writing off. Next entry for redemption. Entry 10%. Preference share capital account debit premium on redemption account debit to preference shareholders account. %, preference share capital account debit, premium on redemption debit to preference shareholders account. Tell me, how many 10% preference shares are redeemed? So working, we have done 990. 990 into 100. 990 into 10. So they are redeem, preferences are redeemed at what percent premium? 10%. So 10. 99,000. 9,900. Total 1,08,900. Being 10% preference shares. Being 10% preference shares redeemed at 10% premium. Being 10% preference shares redeemed at 10% premium. Redeemed at 10% premium. Achha, next entry we are supposed to pass for writing of premium on redemption, correct? Normally, premium on redemption is written off against divisible profit. But in this question, it is specifically mentioned that the premium on redemption is to be written off against what? Securities premium, correct? It is specifically given in the question, it is to be written off against securities premium. It means what? Okay, we will be using securities premium for writing of premium on redemption. But the problem is, do we have sufficient securities premium to cover entire premium on redemption? Because premium on redemption is 9,900. But how much balance we have in securities premium account? Yes. So in securities premium account, we have only 4,500, whereas premium on redemption is only premium redemption is 9,900. That means the balance amount we will have to take out of general reserve. Entry. Securities premium account debit 4,500. General reserves account debit 5,400. 2. Premium on redemption account 9,900. Remember, we wanted to write off 9,900, but the balance in securities premium account was only 4,500. That means the balance is out of general reserve. Narration being premium on redemption written off. Being premium on redemption written off. Being premium on redemption written off. Bolo, what's the next entry? Next entry will be for creation of CRR. Now, you tell me in this question how much CRR will be needed. Tell me how much CRR will be needed in this question. How much CRR will be needed? Come on, come on, come on, tell me. You are writing 54,000. Now let me see whether 54,000 is correct or not. One sec. The amount of redemption is 99,000. The amount of fresh issue is 45,000. That means the remaining 54,000 is correct. So entry. General reserves account debit 54,000 to CRR account, working not one, 54,000. Being CRR created. being CRR created. And now the last entry for payoff. What is the last entry? That is for payoff. Entry: preference shareholders account debit to bank. Preference shareholders account debit to bank account. What is the total? 1,08,900. Being preference shareholders paid off. Being preference shareholders paid off. Correct? Chalo now. Do you need 2-3 minutes break before we start making balance sheet? Do you need a break of 2-3 minutes? Come on, tell me. Do you need a break of 2-3 minutes? Okay, take a break of 3 minutes exact. Take a break of 3 minutes, right? Chalo, are you all back? And now we are supposed to make a balance sheet. And when we are supposed to make a balance sheet, we are supposed to first write format of the balance sheet. और ये बैलेंस शीट फॉर्मेट के बारे में मैंने आपको क्या बोला था, what I had said about this balance sheet format, that this format should be not in your mind, but it should be in your blood. Exactly. So now I want you people to write down the format of the balance sheet first, and then we will prepare notes to accounts. So first you will write the format of the balance sheet. Make the balance sheet quickly. Balance sheet date is not given. Chalo, are you guys ready about the format? Are you people ready with the format, everyone? This format is the format which we are going to use it in almost 13 chapters. We are going to use this format in almost 13 chapters. Chalo, let's start. Now, how you will prepare the balance sheet? We will take existing balance sheet which is there in the question, and in that, whatever these extra entries what we have passed, these entries will change your existing figures, and if there is no change, we'll write the figures as it is. I want 100% focus because this is the first balance sheet we are preparing on our own. Let's start. First balance sheet this is. First is, in the balance sheet, there were two preference share capitals. 10% preference share capital was there and 11% preference share capital was there. Now tell me, out of 10% preference share capital and 11% preference share capital, which preference share capital is untouched? You tell me which preference share capital is untouched. So 11% preference share capital is untouched. So that will be 5,000. 11% preference shares of rupees 100 each, comma, 60 paid. This is untouched. So 5,000 into 60 comes to 3 lakhs. 5,000 into 60 comes to 3 lakhs. Acha, then you have equity share capital. Acha, in the existing balance sheet, equity share capital was 5 lakhs. Acha, in that 5 lakhs, this 45,000 will be added. In 5 lakhs, this 45,000 will be added. So it becomes 5 lakh 45,000. So it is 54,500 equity shares of rupees 10 each, comma, fully paid. Total of the two, 3 lakh plus 5 lakh 45,000, 8 lakh 45,000. $8,45,000. Next, note 2, reserves and surplus. Is everybody clear about the share capital? Everybody clear about the share capital? 11% preference share capital was untouched. It will remain as it is. 10% preference share capital got redeemed, so it will not come in the balance sheet at all. And equity share capital existing amount was 5 lakh. And there was a fresh issue of 45,000. So 5 lakh plus 45,000, equity share capital became 5 lakh 45,000. Is everybody clear? Next. Second. Reserves and surplus. Acha, in reserves and surplus, first is general reserve. Acha, the existing amount of general reserve is 1 lakh. Correct? Acha, out of that 1 lakh, tell me how much has gone. How much general reserve has gone? So 5,400 has gone for writing of premium on redemption, and another 54,000 has gone in creation of CRR. So general reserve 1 lakh minus 5,400 minus 54,000. So how much is left out? 1 lakh minus 5,400 minus 54,000 comes to 40,600. Next. Development rebate reserve. Now tell me, development rebate reserve is touched or it is untouched? Development rebate reserve is touched or it is untouched? Yes, development rebate reserve is untouched. 50,000 remains as it is, not touched at all. Achha, now see in your entries, are there any new reserves came from the entries? Everybody run through your entries and tell me, are any new reserves coming from those entries? Capital reserve. Capital reserve is coming. Achha, capital reserve, how much it is coming? 800 rupees. And one more reserve has come, CRR. Tell me how much CRR has come? 54,000. Correct. Total up the reserves. One 45,400. Three. So coming back to main answer. Share capital 8,45,000 we have written. Reserves and surplus 145,400. Acha, share application money pending allotment is dash. Non-current liabilities is dash. Current liabilities, creditors. Creditors are 1,51,000. Chalo, total up. 8,45,000 plus 145,400 plus 151. How much it comes to? 11,41,400. Note number 3. non-current assets. Acha, in non-current assets, tell me what all will come. Goodwill, 90,000. Land and building, 3 lakhs. Plant and machinery, 2 lakhs. Total 5,90,000. Then 4. See, this goodwill, land and building, plant and machinery are all items untouched, so they will remain as it is. In the balance sheet, you can see even creditors were untouched. So all those items which are untouched, they all will remain as it is, and the items which are touched will be changed. Now 4, current assets. In current assets, stock, $1,10,000. Debtors, 2 lakhs. Bank, into bracket, 2,50,000 bank balance is already there. Bank balance 2,50,000 is already there. Achha, out of 2,50,000, what will happen? So 800 debit is there, that means cash has come. Then 49,500 debit is there, that means cash has come. Then 1,08,900 is there, that means cash has gone. Correct? So how much is cash total received and total went out? So bank balance, existing bank balance was 2,50,000. In that, 800 will be added, 49,500 will be added, and 1,08,900 will be deducted. Tell me how much bank balance will come. Stock, I wrote on the wrong line, 110,000 will be stock. Debtors I had written in the wrong line initially, 2 lakh. Tell me how much is the final bank balance? 2,50,000 plus 800 plus 49,500 minus 108,900. Total 191,400. Next. Preliminary expenses. 50,000 remains as it is. So all those items which are untouched, they will remain in the balance sheet as it is. And all those items which are changed, that we have altered and written. Tell me the final amount of current assets. $551,400. Acha, non-current assets amount 5,90,000. $11,41,400. $11,41,400. Does your balance sheet tally? Yes. So this was question number 2. Okay. Now we will take next question. Question we will take is question number 1. Take question number 1. Page number 16. Question number 1, page number 16. Please read the question. Please read it. ABC Company Limited, whose issued share capital on 31st March 2017 consisted of 12,008% redeemable preference shares of 100 each fully paid and 40,000 equity shares of 100 each rupees 80 paid, decided to redeem the preference shares at a premium of rupees 10 per share. The company's balance sheet as on 31st March 2017 showed a general reserve of rupees 18 lakhs and capital reserve of rupees 1,70,000. Now I want you people to make a correction. Wherever it is written capital reserve, please replace it by profit and loss account. Instead, just cancel the word capital reserve, and in its place, I want you people to write down profit and loss account. Further, the redemption was affected partly out of profits and partly out of proceeds of new issue of 6,007.5% cumulative preference shares of 100 each at a premium of 25 per share. 508% preference shareholders were missing. Underline that wordings. 508% preference shareholders were missing. This is the only adjustment which is coming for the first time in the chapter. Further, on 1st July 2017, the company at its general meeting resolved that the reserves be applied in following manner. 1. Declaration of bonus at the rate of rupees 20 per share on the equity shares for the purpose of making the said equity shares fully paid. And number 2, issue of bonus shares to equity shareholders in the ratio 1 share for every 4 shares held by them. You are required to pass necessary journal entries. Into bracket, just write down narrations not required. In the bracket, please write down narrations not required. Narrations not required. Chalo, now everybody, please read this question carefully and tell me which 2 chapters are mixed up in one question. Which are the 2 chapters mixed up in this question? Tell me which chapters are mixed up. Yes, it is redemption of preference shares and issue of bonus shares. Two chapters are mixed up in one sum. Correct. And actually speaking, redemption chapter also you know, and bonus chapter also you know. So technically speaking, in this question, nothing is new for you. All right. Chalo, let's start. Narrations are not required. They have said in the question, so we will do in our freestyle where headings are more important compared to journal entries. Compared to narrations, give the heading Journal of ABC Company Limited. Journal of ABC Limited. (2017) 31st March. Redemption of preference shares. Achha, now listen. As far as redemption of preference shares is concerned, how many entries we are supposed to pass? 5 entries. Chalo, everybody pass these 5 entries on your own. Everybody please pass these 5 entries on your own. Everybody. Chalo, are you finished with redemption entries? 5 entries for redemption. Yes. How much will be transferred to CRR? So amount of redemption is 12 lakh. Amount of fresh issue is 6 lakh. So transfer to CRR will be 12 lakh minus 6 lakhs. And last entry, preference share holders account debit to bank account. Preference shareholders account debit to bank account. Now, everybody, please pay attention here. Everybody, please pay attention here. Everyone, listen, please. In this question, they have given one specific information which you have underlined. 508% preference shareholders are missing. Oh, that is important. Now see over here. Everybody please see over here. See in your second entry, there were 12,000 preference shares of rupees 100 each. They were redeemed at a premium of rupees 10 each. That means on 12,000 shares, 110 rupees was payable. Are you clear? Now, when you are actually wanting to make payment to preference shareholders, you found that 500 preference shareholders are missing. Many times this happens. Some shareholder has changed his residence and new address is not yet been updated with the company. So company doesn't know the change of address. So company will prepare a check in name of that preference shareholders for repaying his capital. The check will go to his old address. And if he is not staying there, the check will come back. Means company wants to pay money, but the shareholder is not available at that address. So if company wants to pay money, but shareholder is not available at that address, so check will return without payment. So here, tell me, if out of 12,000 preference shareholders, what we want to redeem, if addresses of 500 shareholders are not known to us, so tell me, we will be making payment to how many preference shareholders actually? Tell me, we will be making payment to how many shareholders actually? It will be 11,500. So these will be 11,500 into 110. Into bracket, you can write down 12,000 preference shareholders minus 500 preference shareholders missing. Means we want to pay them, but they are not available at the address. It is missing. So this amount will remain as a current liability of the company. Whenever in future the people will come back, we will make payment to them. How much it comes to? 12 lakh 65,000. Please check somebody. Is it coming 12 lakh 65,000? Please somebody check. Okay. So this was first part of the question where we are having redemption of preferences. Now there is a second, there is a declaration of bonus at the rate of rupees 20 per share on equity shares for the purpose of said shares making fully paid. So write down now second bonus. The second concept in this sum covered is 1st July conversion of partly paid shares into fully paid by way of bonus. And for converting partly paid shares into fully paid by way of bonus, how many entries we have? We have 3 entries. We have 3 entries. Okay. Now here, the first thing I want you people to find out is bonus amount. Tell me, how much is bonus amount? How much is bonus amount? How many equity shares are there? Partly paid. And how much is unpaid? Work out how much will be the bonus amount. Everybody quickly work out the bonus amount. So listen, on 20,000 equity shares, sorry, 40,000 equity shares. So on 40,000 equity shares, bonus will be rupees 20. So 8 lakhs. Acha, can I say that these 8 lakh will be always out of divisible profits, right? So it will, when it is always out of divisible profit, can you tell me which reserve you will use it? You tell me which reserve you will use it for this bonus. Come on, tell me which reserve you will use it for this bonus. Yes, you will use general reserve for this bonus. I repeat, you will use general reserve for this bonus. And for this bonus, there will be how many entries? So there will be 3 entries for this bonus. You all know these entries. First entry, share final call account debit to equity share capital account. Amount 8 lakhs. Second, general reserves account debit rupees 8 lakhs to bonus to equity shareholders account 8 lakhs. And third entry, bonus to equity shareholders account debit 8 lakhs to share final call account amount is 8 lakhs. Okay. And now there is one more type of bonus. Issue of fully paid bonus shares. Issue of fully paid bonus shares. Tell me, issue of fully paid bonus shares का ratio क्या होगा? What is the ratio of bonus shares, everybody? For issue of fully paid bonus shares, there will be how many entries? 2 entries. Tell me, what is the bonus ratio? 1:4? 1:4 is the ratio. What is the number of equity shares you have? The number of equity shares are 40,000. So against 40,000 shares, there will be 10,000 shares of rupees 100 each will be bonus. Amount is 10 lakhs. Yes. Which are the reserves we are supposed to use? First, CRR. Second, securities premium. And third, you are supposed to use divisible profits. Chalo, everybody go through all the instructions in the question as well as journal entries and tell me how much CRR will be used, how much securities premium will be used, and how much divisible profits will be used. Tell me quickly. Tell me how much CRR we have. Come on, come on, come on. Tell me how much CRR we have. ₹6 lakh of CRR we have. Acha, tell me how much securities premium we have. ₹1,50,000. So balance will be taken out of divisible profit. Divisible profit to be taken will be 2,50,000. Okay. Now this 2,50,000 will be out of what? Tell me. How much is balance available in general reserve? Let's see that first. General reserve. How much balance is left out in general reserve? Originally, general reserve was 18 lakhs. Out of 18 lakhs, see the uses of general reserve. General reserve originally was 18 lakhs. Out of 18 lakhs, 1,20,000 has gone for writing of premium on redemption. Then 6 lakh has gone in creating CRR. Then 8 lakh has gone in converting partly paid shares into fully paid. So minus 8 lakhs. How much balance we have in general reserve? 2,80,000 we have. How much we want? 2,50,000 we want. So any problem or no problem? Tell me, any problem or no problem? No problem. So general reserve utilization is not a problem at all. And for converting partly paid shares into fully paid by way of bonus, we are supposed to pass 2 entries. One, CRR account debit 6 lakhs. Securities, premium account debit 1,50,000. General reserves account debit 2,50,000. 2. Bonus to ESH account 10 lakhs. And second, bonus to ESH account debit 10 lakhs. 2. Equity share capital account amount is 10 lakhs. Amount is 10 lakhs. So it's all over. Yes. Now one question I'm giving for homework, and then we wind up the lecture today. Everything, it was a sudden meeting today we had. Neither I had planned for today's lecture, nor you had any idea. But I think in Lakshya, originally whose lecture was there? Whose lecture was there originally? Suddenly my lecture came because I think a law lecture was there. Okay. Law lecture got cancelled and my lecture came. Okay. Anushri ma'am. Okay. Okay. Now read up one question for homework. Question number 6. Page number 17. This is for your homework. Please write down. This question is for your homework. Question 6, page number 17 is for your homework. Chalo, with this background, we finish our lecture today, right? Please do not forget to do this homework. In the next class, first we will check the solution of this and then we will proceed for further in this chapter. Till then, bye-bye everybody, right? So it was our sudden meeting today, unplanned, unexpected. Fine. Chalo, bye-bye everybody. Take care.